Hello guys. So just wanted to take us through my weekly outlook for this coming week. So just 11 pairs on watch for me next week. So yeah, just a quick one. Let's just quickly dive in. So on the DXY. So from a weekly perspective, let me just clear all of this first. There we go. Yeah, there we go. So from the weekly perspective, what we can clearly see is we have filled these gaps that were left into that area. So even from a mechanical point of view, we can clearly see the mechanics are there. Those gaps were filled, and on the weekly, we can clearly see that we have some bullish pressure that has been there for the past how many weeks? Around 4 weeks. Yeah, despite the candles being low momentum, I do understand that this could just be the corrective start of that run that we end up getting. Because if you even just flip this chart and you look at it from the point of view of this is the impulse and this is the second phase, and now we're getting that continuation to the downside. Also like the fact that we have this sort of expanding into that area that has started committing. So yeah, why is this important? Why is it important to understand the weekly outlook? That's because on the lower time frames, there is somewhat of a trap currently forming, where on the daily we're just pushing up. On the 4 hour, we could argue that price did push back into this low over here, retested it, and currently we're forming this continuation structure over here. So we could basically be playing that impulse correction continuation, even just for the short term down into that area before then we get that push back to the upside. And why is that significant? Why is this area significant just here? We can clearly see that we had this first bit of structure over here that would have gone where we had that sort of expanding just above that area, and we failed to commit, meaning that this eventually became more of a retest of that area and went, and price might just be looking to tap into that area before we go. So we could basically get that, and then we go where the higher time frame then comes and overrides whatever is here, and a lot of us might be looking to take this to the downside. So just something to note over there. So just being patient with the DXY still, and I'm looking to see how it ends up playing out for the first couple of days this coming week. So yeah, if we do get a strong impulse to that side and we have a small continuation mimicking what we had just over there to the left, we could basically play that down into that area, understanding that this could pivot. So that's my current outlook on the DXY. And what does that basically mean for a pair like Euro dollar, which is the only dollar cross pair I have on watch for this week? Yeah, just as drawn on, let me just hide this. Similar positioning on Euro dollar. We also did come and retest the back end of that high to the left, push to the upside, and currently we are getting more of the same, more of a similar structure to whatever the DXY is forming. And you could argue that is complete. Yes, and it is also retesting the back end of this small high, small inflection high to the left. So we could also play something similar where we get a strong impulse up, we get a small continuation mimicking that as well, and then we end up playing that even just to that area, and then we end up forming something like this, with that now being the middle section, which is really nice in consideration of the fact that this was also retesting the back end of this whole volume just over here. So if we do get that and this ends up giving us a continuation to that side, to the downside, then we can basically capitalize on the DXY strength while taking this shot. So yeah, that's all I have on the dollar and the dollar cross pairs. So next up, I do have JP225, just as more of just to provide that understanding of the yens, because the yens are beautifully positioned for this week. My watch list is actually yen heavy. So looking at this on the weekly, what can we clearly see? We do have a small gap down into that area. Just seems like background noise. Anyway, so yeah, we do have a small gap into that area. That week was not really filled. We did just tap at the base of it and we push back to the upside. So yeah, something that we also understand is we can't just always push to the upside. At one point, price will need to retrace or rather pull back just a bit. Correct, because you can't just run up a hill all the way. You need to breathe. So yeah, the weekly is positioned really, really nicely. On the daily, we can clearly see that we have tapped an area where there was some aggressive sell volume coming to the market because we had that area over there which price squeezed into, and then you can clearly see the momentum that came from that area. So there is some sell volume at that area which price has tapped into, and you can clearly see that we have been sort of reacting to it, and currently in the daily we're just sort of stalling. So on the 4 hour, what can we clearly see? Another stall as well. On the hourly, we do have multiple hook points to the left, but something to note is why am I not that interested with this hook point over here? Because it's basically sat just above that area, and this is what is retesting that broken low over there. And why is that low significant? Because this was basically the follow through of that confirmation bit of price action over there. So just in consideration of that, we could get this piece of price just stall over here for a bit, then push back up, tap into that inflection area over there where we end up getting this sort of sending channel rather structure. And if we get that as confirmation and and a small continuation there, we could basically play that to the downside. And what does that mean for the NPS that we have on watch? So first off, I do have Cardian. Cardian is more of an interesting one where it could go early or it could also just all mimicking whatever the JP225 will be doing. On the 4 hour, we are positioned really, really well, and you can clearly see the large amount of volume that has been formed. So if we just also draw on this structure, which is more of an expanding structure over here, but hasn't really tapped that touch and is just trading at the override, which we can clearly see from that area into that area. So yeah, we push to the downside, fill that gap. Having filled that gap, we push to the downside. We're also trading just beneath that gap over there. So something interesting to note. So dropping back down to the hourly, what do we basically have? We are also just trading beneath this low over here, which is interesting because we had that piece of price first retested. So if we just zoom in to the current piece of price action, you can clearly see that we have a small gap over there. But something interesting with that gap is the fact that we sort of scooped back in search of it, but went off the previous high as well. So this could just plummet because we have this as more of the volume being built up, and that could just follow through where we get a small continuation structure over there, and it goes. Alternatively, what could happen, and that is more of what I'm leaning towards, is this piece of price will just push to the downside, then come back up for a third touch where we get to feel that mini gap that was left over there, and we get that. So if we do get that, and it's also retesting the back end of that, this will be really, really nice. Just taking it even with a 15, 16 pip stop after a 1 hour retrace candle, or rather 1 hour bearish high test down into that area. We have around 7.21% to the base of the structure. We have 3.7 down into that 7.4, into that area we have 12.9, and down into the area where we had a lot of buy volume coming to the market, we have around 20% capitalized on. Okay, this is not the only move that will go, and down moving even just down into this area for that 7%, we could get scale-ins on slightly lower time frames. So yeah, really, really nice positioning on Cardian. Next up, I do have Euroyan. For Euroyan, nothing really different. Actually, a lot of the NPS are just positioned in a similar way. For Euroyan, I really, really like it because you can clearly see how price approached that area with all these gaps being filled, and even just playing this small individual range where we broke above, pushed to the downside, never really got a continuation structure beneath that which we was looking for. But currently we have broken beneath this last piece of inflection over here where we had some volume being built to warrant that next leg to that upside. So we are currently just trading beneath it, and we have a stall on the 4 hour, which is something we really, really like to see. So if you look at this, this is quite a simple play where if you get price, just establish a second low and we push up into that area, potentially retest the back end of that. And then we have that as our continuation structure. Really, really nice because you just take it and we protect our stops just above that area, even for a 22.4%. Down into this area over here, we have around 6.74 to play with. And if this ends up breaking out before we even get another continuation, even just down into this area, we have around 8 9% to work with. So, really, really nice positioning on Iran as well. The other end pair I do have is Pound Yen. Pound Yen, also another similar play, but just a small tweak to this. Pondian did have a gap down into that area, so it also makes logical sense why this will push back to the downside. So if I just hide this and we get to study this current piece of price action over here, we can clearly see again we do have multiple hook points. That we have that where this could basically just form a flat and we get that establish another base, push back up into that area, fill that small gap over there, and we end up going off of this area. Alternatively, yeah, off of that area, even for a 26% I have 26 pip stop loss. Down into that area we have around 2.3, we can manage the position. Down into that we have 4.83, and all the way down to our target we have around 12.73% to capitalize on. The only other variation that we could get is price push back up into this area over here, which is retesting the back end of that, so there is some significance to it. And we end up getting some structure into that area where we just evolve and form that, which is more or less what we're also looking to happen on the JP225. So if we end up getting that, we could basically also just take that as a risk entry to the downside, which is also a viable setup to take. So that even with a 27 pip stop down into that area, down into the base of the structure is 3.97, down into that 6.42, and all the way down into that area you have around 13.99% to work with. So really, really nice positioning on that as well. Two more yen pairs on watch, which is Aussie yen and dollar yen. So for Aussie yen, what I'm currently looking for is I just don't like the fact that price already tapped this low. Did not really break beneath it. It only tapped it. And in consideration of that, I moved this more to the additional side because the others have more of a reason to push to the downside. On the weekly, we had two aggressive bearish candles push to that side, and then we had the other weekly candle just stop just beneath this high to the left. So we have a small gap over there, more of a zone that has been tapped by price, pushed to the downside. So looking at this on the 4 hour, we are currently just stalling just beneath it. So on the hourly, what can we clearly see? I really like. I don't like the fact that this is slightly steep, but yeah, we could still make sense of it. We are still trading beneath that area. So if this just pushes to the downside ever so slightly, then back up to establish that touch, and that is our second base, and then we'll have that structure retesting the back end of that. Yeah. So if you're just noticing something is that a lot of these CN pairs are positioned in the same type of way. So if at all this is respected and we don't have gaps at the open market open, then this is a really, really nice week to have the hands on watch. So even just down into that area, we have 10.34 to capitalize on. Next up, we have dollar yen, which is the last yen pair that I have on watch. Nothing different with this. We do have our areas down here, and we have that small gap that was left. So I'm just looking for something similar to what we have on all the other yen pairs, where we have a small gap into that area. So if this just pushes to the downside, gets another bottom, pushes into this area, we can clearly see that we'll have somewhat of a structure into that area, and that is what I'll be looking to take to the downside. So we just take that with around even a 30 pip stop, and we it's scary to take that. So down into that area, 4%, all the way down into this, we have around 12.09% to work with. So yeah, those are the N pairs for you. But for my top six, the other pairs that I have on watch are a couple of Kiwi pairs. So first off, I do have Aussie Kiwi. So to quickly just start off with Aussie Kiwi, you can clearly see that we did tap into an area where previously buy volume kicked into the market. We left a gap into that area before approaching it. We did close at that area with a beautiful morning star, and we still have some bullish pressure at that area. So I'm just looking for that to follow through. We have tapped into this area over here, which is also slightly significant because we did have this continuation structure we had that failed to push, and we had that basically to test the back end of all that volume. So at the moment, I'm just looking for that to be more of a continuation structure for me on the lower time frame. So on the 4 hour, you can clearly see that we have somewhat of a base over there established, and I'm not looking for much. I'm just looking for this to basically form a second bottom of the structure, push into that area. And if you do get that, I'm taking that to the upside. So just to be neater with that, dropping down to the hourly, and I'll flip my chart for this to be clearer. What we basically have is price tap into that area. I'm looking for price to do that. So if we do just stall over here, form more of a corrective middle section, push to the upside, and then we tap that. That is what I'm looking for to take that all the way down into this area. This amount of volume built up here will be really nice, and considering the fact that this is not the cleanest of breaks or rather impulses, you can clearly end up playing this as a flat continuation, which then drops out to the upside into that area over there. So next up, I do have Euro Aussie. For Euro Aussie, I'm looking to play this short. Well, if you look at the whole progression on the higher time frame, we've just been moving to the downside ever so slightly, looking to tap into these areas over here where buy volume was set as well. So dropping down to the hourly, what do we basically have? Um, we have this small gap over there, but you can clearly see that there is also a hook point just beneath that gap. So if I am to also mark that area on, we have basically tapped it, but look at how we are moving away from that area. Quite corrective, yes. So high chances this piece of price just pushes back to the upside in search of that, which is more valuable an area, and then we push back to the downside, and we get our continuation structure over there. Really, really nice. The only other variations to this would be price drops off from that area, and we can clearly see the impulse, and then we get a continuation structure mimicking that, slightly even beneath that. Then that I will look to play then just down into that area or all the way down into that area. Another alternative play to this would be this just continues selling off ever so correctively, then we push back up and find this as our three touch structure, which will be the ideal or rather the textbook play, where we take that as a 4 hour risk entry, or we look for an insurance entry where we get our impulse down as the confirmation candle, and we look for a lower time frame continuation structure just over there to play that to that side, to the downside into that area. So a lot of variations on this, and the other end pair that the other kiwi pair that I have on watch is pound kiwi. Pound kiwi has been trending to the upside over time. It has been trending to the upside, and if I just go to the weekly, what I'm clearly seeing is we do have this inflection area just above, so we could basically go off of this area because we just tapped the back end of that, or we could gravitate into that area. So I'm just looking to take this long because of the type of price action we've been getting. We have a series of higher highs, higher lows being formed, and at the moment we've already established somewhat of a low. And look at how the previous daily candle closed, more of a doji, more of indecision. So this could just follow through to the upside, which is what I'm looking to capitalize on. So if I just hide all of this and I flip my chart, you can clearly see that we had this continuation structure over there retesting the back end of that. We pushed to the downside and we currently just retested that. So if we do follow up strongly on the 4 hour and we get a continuation structure over there, I'm definitely playing that into that area, and that is all I'm looking for next week. Yeah, nothing really much. The only other pair that I think will go under the radar would be Pound Swiss, just because of the price progression. We are also just positioned beneath this large continuation. I like the sequence in this. So if I just hide all of that, we can clearly see that we have everything we need for that to go. And yeah, if this ends up evolving into more of a three-touch structure, just like that, and we end up continuing to the downside, this will be beautiful. Alternatively, you just push slightly further to the downside, form a continuation, and then we go. So yeah, that's all I have on watch for next week, guys. Really, really nice variation. Cheers.